What do you make of the data, and this is something we've been talking about a lot, of course, in general in 2020, of greater retail investor involvement? Does that worry you at all or not?
Well, it can be worrisome a little bit because the last time we saw something similar to this, I've been around a long time, was back during the internet bubble before things kind of blew up. But there are a lot of differences now. Many of the stocks that are driving the market higher, as you know, are very mega cap stocks that are very profitable. Back then, many of those .com stocks were not making any money, had very few revenues. The other thing that's driven it, of course, is the fact that commission prices have come way down. That began sometime late last year, as you know. That has attracted a lot of people to the market. And frankly, it's just a lot simpler to trade now. There's more information available. Electronic trading is very easy to do. It's very cheap to do. I always say that if people get into investing for the first time, regardless of what gets them into that, is a good thing, because everyone needs to be an investor. And as long as they're thinking long term, that's a good thing. The negative side, of course, is if there's some speculation going on, and we know there will be because there always is, that could be a problem. And we have seen some activity where some of the new traders and new investors have been buying stocks that are either bankrupt or almost in bankruptcy. And in many cases, I think they've gotten hurt. But if they're buying quality names and they're focusing on the long term, it can be a good thing in the long term, because they should be.
You like financials at the moment, Randy?
Well, we haven't outperformed on financials. And in fact, it's the only sector we haven't outperformed on right now. And part of the reason for that is that it has been the second worst performer year to date. And obviously a big component of that is the low interest rates. But when the bull market continues, as I think it will, and valuations get high, as they are, what happens is people start looking for places where stocks are a little bit more reasonably priced. And financials are one of those sectors where that's the case. The only sector doing worst is energy. And as you know, there are lots of problems with energy. And energy, in fact, is doing much, much worse. But financials, because of where they're positioned, because of how stable and strong the balance sheets are in many of these financial companies, they will be looked at as potentially attractive opportunities because they are priced a little more fairly than some of these other sectors like technology and consumer discretionary and a few others that valuations have gone way up.